Bar graph daily market analysis. Flag European Union Euro in recession. Market overview. Today, the U.S. markets are closed due to Labor Day, leading to a generally calm macroeconomic environment. In Germany, the focus is on the state elections, where a far-right party won for the first time since World War II. The German economy remains in a slump, with the manufacturing sector still in recession. Eurozone data and ECB outlook. Eurozone inflation data for August surprised on the downside, increasing the likelihood that the European Central Bank (ECB) will cut interest rates by 25 basis points at its September 12 meeting. However, the two-year Euro-USD interest rate swap spread continues to trade within 100 basis points, supporting Euro-USD around 1.11-1.10. Today, we'll need to see if the 1.1040 support level holds. Otherwise, Euro-USD may remain within the 1.05-1.11 range for the foreseeable future. United States USD outlook and key economic data. The US dollar, which had depreciated by about 0.5% since early July, saw an increase last week, indicating a possible end to the dollar's downward trend. This week, the market's attention will be on U.S. economic data, including ISM manufacturing Tuesday, JOLTS job openings Wednesday, ADP and ISM services Thursday, and the August jobs report Friday. If Friday's jobs report aligns with expectations, 195,000 job gains and a decrease in the unemployment rate to 4.2%, the market may only price in a 25 basis point rate cut by the Federal Reserve at its September 18 meeting. However, if unemployment rises further, the likelihood of a 50 basis point cut increases. Candle political impact and market expectations. As we approach the November elections, the rising odds of a Democratic victory could continue to pressure the dollar. The first televised debate between Harris and Trump on September 10 will be closely watched and could significantly impact the markets. Green Circle Stock and Commodities Analysis. China's economic situation and market impact. In China, the Caixin manufacturing PMI returned to growth territory, beating expectations with a reading of 50.4. This growth was driven by new orders and stronger production, which contrasts with the official NBS manufacturing PMI that showed continued weakness. These data points could lead to a rise in commodity prices and stocks as they signal increased risk appetite. OPEC Plus decisions and the oil market. OPEC Plus has decided to proceed with its planned oil production increase in October. This decision is supported by the disruption in Libyan oil supplies and expectations of a Fed rate cut in September. Red Circle U.S. Stock market overview. U.S. stocks experienced mixed movements last week, but ultimately closed in the green after strong updates in the technology sector, with Nasdaq outperforming. If the jobs data at the end of the week comes in stronger than expected, the likelihood of a 100 basis point rate cut decreases, which could negatively impact stock indices, particularly in the technology sector. Conversely, if the data significantly underperforms, the stock market could decline due to recession fears and worries about a sharp drop in future sales. Checkmark ideal scenario for stock indices. The most favorable scenario for stock indices would be strong services data combined with slight weakness in the labor market, which could strengthen the case for a soft landing.